Hello guys, in this video we will see the solution of question number 25. Okay, so have a look at the question, page number 438. So in this question, Pawar and Sachar, they both are partners as per the ratio 3:2. Okay, so uh, they decide to dissolve the firm, okay, on 31st December 2019 under the following conditions. So you can see here in question, have a look at the question first. Okay, so from the assets column, we will extract all the balances excluding bank and cash. Okay, because they are cash and cash equivalents. So you know that cash and cash equivalents doesn't appear in the realization account from balance sheet. So freehold property, investments, sundry debtors, and stock will be extracted. Okay. So we write in the debit side. Okay. So whatever the assets item are there in the question balance sheet. Okay. So we have to write it down towards the debit column of your realization account. Okay. Freehold property 16,000, investments 4,000, sundry debtors 2,000, stock 3,000 from balance sheet. Okay. So extract these four items first. Okay. Now then move towards liabilities column. And in the liabilities column, we have capital accounts, which do not appear here. Okay. Then sundry creditors amounting rupees 2,000. Okay. This balance of profit and loss will not appear in the realization account because it goes towards the credit side of your partner's capital account. Okay. Now, the partners decide to dissolve the firm on the date that is mentioned in the question. Okay, so uh, Pawar took over the investments at an agreed value of rupees 3,800 rupees. So whenever the asset is taken over by a partner, his capital account should be credited here. Okay, and write the amount 3,800 rupees. Okay. So other assets which were realized are highlighted here, okay, which is freehold property 18,000, sundry debtors 1,800, stock 2,800. Okay, so there is one more asset which is given in the adjustment. Just have a look that there was a typewriter, okay, which was purchased, and the same was not shown in the balance sheet, so we have to write it down here. Okay, so typewriter will appear. Okay, and by selling typewriter we realized 1,000 rupees, hence we have to write down the amount here. Okay, 1,000. So total of this assets realized will be 23600. Okay, so this is your assets realized by bank account. Okay, now moving towards this payment to creditors, we have the information that creditors of the firm agreed to accept 5% less. So you have to calculate, first of all, 5% of 2,000 rupees, okay, which will be 100 rupees, okay, and subtract 100 rupees, which will be 1,900. So we are paying off the creditors at a discount of 5%. Okay, so write down out here. Okay, now there was the expenses of realization, okay, which was rupees 400 rupees. Okay, uh, yeah, this much. These are only the adjustments. Okay, so you will find the total after this, and you will see that the total of credit side will be more. Okay, and there will be the balance towards debit side of rupees 2,100, and this balance which is appearing in the debit side will be known as your profit on realization. As I have previously mentioned that instead of writing directly to profit on realization, you can simply write to partners capital account bracket profit on realization. Okay, So this profit on realization will be shared between the partners as per their profit sharing ratio, which is 3:2. Okay. Now, after preparation of this realization account, we will prepare partners capital account. These balances are extracted from the balance sheet liabilities column. Okay. And in the liabilities column, again, we can see that there is a credit balance of profit and loss account of rupees 1500, which will be shared between Pawar and Sachar as per their profit sharing ratio of 3:2. Okay. And we had this profit on realization before, so simply write it down towards the credit side. Okay. I'm sorry for this credit. Okay. So which has been placed here by mistake. So anyway, now have a look at the realization account. Now towards the credit side, there is Pawar's capital account. It is not Pawan, but it is Pawar's capital account. Okay. So it was of investment taken over. So whenever any partner takes over any form of asset, that will appear in the credit side of your realization account, and the same will appear in the debit side of your partner's capital account. Okay, 3,800. And now find the balance. Okay, that balance will be your final payment. Okay, we will write to bank account, and these are the balances. Sorry, balances. Okay. Now at final, we prepare bank account, and this balance BD is taken from the balance sheet. Okay. And this amount of cash, it has been now included in your bank account. So we have written to cash account 4,000. Okay. And in realization account, we can see that assets were realized for 23,600 rupees, which will be now here in the debit side of your bank account. Okay, so to balance BD 2,000 cash. Okay, 4,000, which is present here. Okay, in the balance sheet. We were asked to prepare bank account. That's why we have included cash in the bank. Okay, if we were supposed to prepare cash account, then the bank balance would be transferred to cash. Okay, so depending upon that, you have to maintain the accounts. Okay, so the total of debit side will be 29,600. Okay, now moving towards this credit side, we have in the realization account, you can see that creditors were paid off. Okay, for 1,900, and there was the expenses on realization of rupees 400. So the same will appear in the credit side of bank account. Okay, and the final payments which we have to pay to partners of rupees 15,680 and 11,440 rupees. Okay, so together it will be 27,300. Okay, so when you find the total of this debit side and credit side will match. Okay, so you already know that bank or cash account in case of dissolution, it acts like balance sheet. Okay, balance sheet will not be prepared because the firm doesn't exist anymore. Okay, so this is the case of dissolution. Hence, there will be no preparation of balance sheet in case of dissolution, but bank or cash account acts like balance sheet. Okay.